hold on real quick. I'm gonna try to make this a little faster than usual. I apologize, my cat's being kind of noisy. He thinks it's time to play. He thinks it's time to play. Oops. So yeah, you're gonna hear him meowing, and I'll do my best to. I'm just gonna quick post this link, and then we'll get started. Impromptu. We're gonna make this a training video. And I think it'll be helpful not only for everybody else, but also for 1 hour. We're gonna make this about 1 hour. I think this will be helpful for everybody, even if you don't have the algo. But I'm going to use the algo to show you how I identify reversal points. This is a relatively new idea, and so I'm still kind of getting it worked out. Okay, so my apologies for that if it's not perfect and concise. But I want to kind of go over the concepts quick, and then find some examples of places where it might have worked. So the first thing you need to know is this. So we're gonna adjust this a little bit because these don't. So the one in the middle is just the MACD histogram, but I like looking at it as a line because I just use it for divergence, just as like for some supporting evidence that there may be a potential counter trend trade, or just to see how strong the trend is. Then the one on the bottom is the volume zone oscillator. That's just another indicator that I like to watch to see how strong there's volume is on the bid versus the ask. It's not exactly the same as cumulative delta, but the concept is kind of similar. It's a free study on Sarah charts, and I've got a couple streams where I talk about using it. There's quite a few setups that I found that use it. Again, it's just supporting evidence of a trade. It's not something that we're going to use to like get us into a trade. The one I really want to talk about today, though, is the Weis waves, which are on top. So Weis waves are cumulative volume waves. So if you look, let me find one that's kind of big. So here you've got a down bar, and then so it's going to put in however much volume is in that bar, and then if the next bar goes the same direction, it's going to do this bar's volume plus this bar's volume, right? So the first thing you're going to see right away is that when you have all the volume at the highs or the lows of what we call a wave, right, or rotation, what you're going to see is a big difference, like a big bar suddenly, whereas before there was not a big bar. So that's one thing to watch for, especially in these really large waves, because if you can get under where all this volume came in, so in this case it's this bar here, if you can get volume below that, if we mark a line here, if we can develop some volume below that, which basically means getting the VPOC line, this yellow line, below the low on a bear bar. So see, these are bull bars, and this is a bear bar. The purple ones and pink ones we're not even going to count because those are just price moving without volume really following. But here, what you'll see is none of these bars that were bearish, which is really just this one, got the volume below that level. And so price goes higher. But once we do get volume below that level, which happens those are purple, happens right here, right? The VPOC line is clearly below the low there. What usually will happen is that you'll get a rejection from those trap traders that were buying a lot of volume there tend to act as resistance. And so that's kind of a fun way to catch the highs. You're not going to catch the high, but you can confirm the reversal. Wait until you got underneath it with the VPOC of this is a Renko chart. These are 24, or sorry, this is 40 tick Renko, but you can do whatever tick chart you want. So see, in the same exact spot, we can pull up the 24 tick Renko, which is what I usually trade off of, just because that's like a more comfortable risk. Each one of these bars are approximately 15 to 18 points. So for that one, here, let me hide the drags. So for that one, where it was coming, we were seeing it confirm right here, right? That was the sell. But on this Renko chart, we're zoomed in, right? It's kind of like a smaller time frame. And you can see that we have a similar phenomenon here where all of a sudden we get these really big bars, Here, I'll make this bigger. Because we don't need to see this right now. So see how relatively suddenly they started to get a lot, like almost exponential, whereas here it was more like a linear curve, right? And so that occurred, I'd say, started right there, right about there. So if we put a line there, we're going to find that line is about the same as it was in the other one. Let's say that one. It might be the pink one, but let's say it's this low, right? So I would wait, and I wouldn't short until we developed volume below that level, unless we had the same phenomenon happen on a higher rate wave, right? So we'd wait, and usually around this point is where I would be like, oh no, I missed the high, right? Without this technique. And so instead I can see, okay, now we've gotten volume underneath, right? That brown one is a bearish bar with the VPOC dash and the line that connects them below the low of this volume surge. So now I know I don't want to be bullish, and number one, don't buy dips, right? But number two, if I can get a setup to confirm and this rejects, I can short it. And so I get a star here on that bar indicating an aggressive seller came in. Now you don't need the algo to not necessarily to see aggression. You can probably see it on the footprint. If you see some aggression in the bar that was unusual, or maybe you're watching the DOM and you might be able to see it from just price action, you don't necessarily need the algo, but then you'll get the sell, right? And if we came back to that area again and it rejects again, you could sell it again, right? So that's a very simple way to use the Weis waves to trade reversals. Now I want to show you a more complex way, but something that's good, I believe is going to help us quite a bit. What I've done is I've added a study to the Weis waves. Again, it's these waves we're talking about here, which is cumulative volume. I've added a study that when we make a wave and it confirms, which takes three bars, we say, to confirm as like a true rotation, which, well, it's not an Elliott wave, it's a Weis wave, right? We'll still call it wave, but so we're going to say 3 bars in the same direction are going to confirm that rotation as being real. Because if it's just 2, let me find what's just 2 here. These, so it's 2 down, 2 up. You can see up here, this is not really a rotation, in my opinion. This is not a rotation, right? And this is really not necessarily a rotation. It's like a pivot, right? So we're only going to count waves as like true rotations when it gets at least 3 bars of the same color. So the green ones are bullish waves, and the gray ones are bearish waves or rotations, right? So we're not going to count the 2-bar rotations. We're only going to count them when they are 3 bars long. And so what I've done is I've added a study that basically makes a dash here. I tried to make it a line, but it doesn't stop where it's supposed to. But it's going to make a dash, and that dash is going to be moved, displaced 3 bars to the right, and that dash is going to be located at the high of wherever the wave on the opposite direction was going before. So for instance, this big wave, you're going to see a dash at the high that's going to show up 3 bars later, right? And the idea here is we can very quickly, when we're trading and things are moving fast, we can very quickly determine whether or not the wave that we're trading in now, no matter how big, we can very quickly determine whether or not that wave is dominant compared to the previous wave. So here, if you looked at, I guess we wouldn't know that it's a complete rotation until 3, right? So we need this 4th one to print up to know that this was a confirmed wave. So right here, we can clearly see that the dominant wave right now is up. Hopefully everyone can see that. This is the stronger wave compared to the current or the most recent wave. So bulls have control of volume at the moment, right? And then we would go to the next wave, which would be at least 3, right? And it shows up here. And we can now see that a new dash comes in down here. And that dash is associated with the high of this down rotation, right? So now what we want to see is we want to see which one is most dominant. Well, for the moment, it looks like the down wave is dominant, but we have not gotten a down bar, right? So we have to wait until we get a down bar to know. So see here, we get another up bar, and that up bar gets higher than the dash, which means once again, bulls have control. So at no time yet did bears actually get any volume, and there's really no reason to think about looking for any reversals. There's no sign of divergence on the volume. It's not worth fighting, right? So we keep going, and now we finish that up rotation, and once we get three bars from there, we're going to get another dash, right? So this dash is associated with this high. So to get any sense that bears might be taking control, what we would want to see first is bear volume increasing beyond that, right? So we would see this next bear wave does not meet that criteria. It does not reach this dash, right? And instead, the very next bull wave, is going to try to break this one. Now, this is a little tricky because we only had a 2 rotation wave, so that one's not going to print quite right, but don't worry about that. Now what we're going to see is this bear wave is this is now going to be dominant. Now here, the bull wave, unfortunately, was only 2 bars. It was the strange situation, it doesn't happen very often, where we had 2 bars and then 1 3-bar down and then 2 bars up. You're still going to get a dash here, the way I have it set up. But that's okay, because this is actually relevant, in my opinion. We've had a period where bulls have cooled down, basically. And so now bears have the opportunity to become dominant, which happens right here, okay? What that also likely means is that we have potentially a divergent high, right? So volume at the high, you could have actually told this way back here once you came off of the high, but this is where it becomes relevant. So at the high for price, which was a way up here, the volume of that rotation was less intense than the volume of the up rotation that happened previous to that, right? So when we're talking about divergence, we're talking about waves going in the same direction and price going in the same direction, but the waves themselves, the cumulative volume, is less on the more recent wave compared to the previous wave. When we're talking about dominance, we're looking at gray versus green, right? Or green versus gray. So now what we have is a divergent upwave at the high, which is potentially bearish. It basically means that the buyers are taking a rest and they're potentially trapped or at least vulnerable to getting trapped at the highs. But now what we need is a dominant bear wave to confirm, and that technically the most aggressive way to determine that would be to look back here at this 2-bar wave, the fact that it came after a dominant wave, and you got a bigger bar on this Weis wave here than the dash that's associated with it, suggests that from this point on, from right here, you may now be in a bearish scenario. So you don't want to be buying aggressively in this situation. Instead, what you can do, you have 2 choices, in my opinion, of how to trade this. And like I said, I'm going a little fast because I want this to be not very long. You could go a lot more in depth here, but I'm just trying to explain the situation, explain how the tools work very quickly, and then get right to the meat of it, which is how the hell do you trade this, right? What do you do with it? The truth is you don't need all these signals. All you need is the Weis waves. The signals are just going to help you see things a little faster. You can still see it on the DOM or on the footprints, but the signals are going to help us in a minute. So here we have we have a wave up at the high that is divergent, right? So once we get that wave, we're going to draw the volume profile over that Weis wave, and what we're going to find is where most of the volume occurred on the way up to the high, okay? And we're going to mark that with a line just to extend it. What we need, the first way to trade this, is if we have buyers trapped up here, potentially. In other words, if we've gotten volume below where the volume came into the high, we can sell an aggressive signal. So a star down or an orange bar, which we don't see here, or a yellow box. They're all different ways to measure volume, to measure aggression. You could do it with the DOM, you could do it with the footprint, but you basically need to see an aggressive trader come in in the opposite direction, so in this case down, after getting these guys trapped. In other words, getting volume and price below where most of the volume came in on the way up. So this is where you know it's potentially bearish, right? And then this would be your potential short because that's the first one that comes after it. Now, normally you'd really want your stop to be at the high, but with futures sometimes you don't have the luxury of doing that because of leverage. So if you put your stop at the high here, that would be something like 11,385, let's say. And here this signal is not produced until 11,360. That's a very, very large stop, right? So your choices are get the trigger here, but try to get short on a pullback, which is great. Otherwise, it's put your stop above this bar at like 11,378, let's say, for like an 18-point stop, which is a little bit better. But then if you get stopped out and they trigger again, you'd probably have to take the trade a second time as long as nothing has changed down here. So let's just see what happens. I actually haven't looked at this. I don't know if this works, but this is just one example of how you would potentially set it up. This is another aggressive bar. So if you wanted, you could aggressively trail your stop here. It's not recommended to do it, but you technically could. Let's see if that works. Yeah, it gives you a nice little rotation down, and you can see now you've got a clearly dominant down wave, right? So all of a sudden, bears have taken control here. Now, it doesn't mean we're going to reverse back to the lows. I want to make that perfectly clear. Just like we talked about in the beginning, what has to happen to reverse a trend is you have to not only trap traders on this tiny little time frame, but you'd also have to trap traders on a much larger time frame. We saw, I showed you a way to do that with the Weis waves by identifying the big jump here and seeing that the low of that bar is this green line, and that you really wouldn't know for sure that you've got a true reversal on your hands until you got volume below that, which happens here. But you wouldn't want to short that breakdown, in my opinion. You'd want to short a pullback and preferably an aggressive signal on that pullback, such as a star. So here or here. But you can see that this new setup that I just introduced with the divergent wave, it did not occur on this time frame. See how this wave to the high had a bigger high, a higher high than this wave that here, right? So there's no divergent wave on the 40 tick, but there was on the 24. But what you do see on the 40 tick is a nice dominant sell wave prior to you getting into your short, which is definitely a good thing. You wanna be following volume into a trade, especially when you're taking reversals and breakouts. You want the volume to go in the same direction as your trade does. So here, that trade would give you a really nice roll down. It just keeps going. So how would you know when to be done with that trade, right? Well, how do you know how to get out, or when are things maybe not continuing to go your way? Remember, this is going to be time frame specific, right? So let's look at a situation where we already found the reversal at the high here. We got into a trade, and maybe we have runners, right? And we want to decide, using the volume and the Weis wave, we want to decide when do we want to either flip to the other direction, or at least when do we want to get out of our trade. So I'm going to show you something very clever and simple. It's going to require 2 time frames, though, okay? So we're gonna first do it on the smaller time frame, and then I'm gonna show you that it actually works in the higher time frames too. So over here I have a 15 tick Renko chart, okay, and then here it's the 24 tick. The information, the prices is the same. It's just that it doesn't take as much movement to print a new bar on the 15 tick. So you'll see, oops, if you can see them both. If I come up here where it starts to reverse, we've got a bar printing here up, a bar printing here up. Here you get a second bar up before you get the reversal. Here you get the reversal. You only know about the reversal here on the very next bar at 113.13.75, right? Here you knew about this reversal at 113.19.75. So you got a little bit early warning on the 15 tick. But realize that your signal to noise ratio is not going to be as good on the smaller time frame. So the bigger time frame you get, The better signal to noise ratio, the smaller time frame you get, the earlier the warning, and the smaller the potential risk, because you can put your stop loss above here, which is and then your entry would be here. So you'd be looking at a 10-point stop, whereas if you waited for this star to give you a breakdown, you would need to put your entry at 11,313, and your stop goes up at 11,330. So it's a significantly larger risk, but realize that it'll work more often than you would if you just found the trade on the smaller time frame. So it's the same information, just faster, right? These are going to print faster because it doesn't take as much price action to print a new bar. So what we're going to look for, we're going to watch both of these charts at the same time, and since we're going down, right? We took the short, and we're going down. We're going to switch to this smaller time frame, and we're going to watch for a situation where the smaller time frame makes a dominant wave. In other words, the bear wave is bigger than the bull wave, or vice versa, but the higher time frame does not make a dominant wave. Okay, so here you can see both. We'll see right here, both waves in this case are dominant. The dominant wave is down, right? You know that for sure once this dash gets broken, right? So that's when you kind of know that, yes, you've got a dominant wave, and here that dash is associated with this wave, and so that dash gets broken right there. So at this point on the smaller time frame, you knew that you had a dominant wave down, and at the very same moment, you found out that you had a dominant wave down, likely on the higher time frame too. So we're going to look for a situation where that doesn't happen. Okay, so we're just going to follow through one bar at a time from one wave to the next, and we're looking for a situation where the bear wave is not the dominant wave on the high time frame, but it is a dominant wave into the low on the smaller time frame. So here you can see clearly here's your old up wave. We are clearly dominant there, right? Here's your old up wave. You are clearly dominant here. Nothing's changed. Stay short, right? Or stay bearish anyway. I mean, manage risk how you need to, right? But realize that the chances that a full reversal is coming is very unlikely. So now we've got some more waves here. So we've got up wave here, right? And then this wave had 1, 2, 3, 4 bars, right? So now we have to see, did we have, whoops, let me back it up just a little bit. Did we have a dominant down wave on the 15 tick? We know for sure that we did not here, because look, that dash never got hit. See that? But on the higher time frame, the dominant wave is clearly down. So here's the rule. If the dominant wave on the higher time frame, if you have a dominant wave on the higher time frame that's going in the direction of the trend, the higher time frame is really all that matters, because generally trends continue, and if you have a trend on a higher time frame that's building volume in that direction, you don't want to trade against that trend. So if anything, when you see this kind of behavior where you have a sudden dominant wave to the upside on a small time frame, but on the higher time frame, it's clearly bearish dominant, what you would be looking for here is a short setup. You want to take advantage of this pullback rather than think about trying to break the trend. Because the trend, if you really want a big trend reversal, you're going to need to see changes on the higher time frame. Seeing this little dominant wave on the lower time frame, it's probably just an opportunity to short the rip, right? So once you saw that, which again, you know that that's a dominant wave right here, and you'd see, okay, or like that the bulls suddenly have this attempt, right? And you look up here, you're like, there's no way we're going to break that, right? So now you're going to look for short opportunities, and so the best one is like either one of these bars are pretty good, but otherwise you can just look at the DOM or whatever you do to get into a trade and see if you can short the rip. Now, are they always going to work? No, right? Sometimes it's going to reverse, but oftentimes you're going to have an opportunity to short the rip. So that one did not work, and that's fine. But now what we're watching for is can we get a dominant wave here on the higher time frame, or a what's it called, divergent wave into the low. So, well, the reason it didn't work is because this, I didn't notice it before, but this is a divergent wave into the low. Take a look. So here, while it's dominant bearish, the bigger wave of the two, looking back, is this one, right? So price is going lower, and it's mostly sellers, but those sellers were not able to produce as much volume in this rotation down as they were when we were breaking down from consolidation. Okay, I didn't notice this before because we were too zoomed in, but this would be a reason not to be a seller. In the same way as up here, we didn't want to be a buyer when we saw this divergent wave, right? Here it took a lot of energy to push us up here, and then we had a tiny little wave relative to that one into the high. It was dominant compared to the bear, right? It's dominant, it's bigger than the bear wave, but it is divergent compared to the up wave previous. So it doesn't mean reverse, but it means don't take the continuation trade, right? So that's what we could have seen here, and we would have known that for sure once the bull bar gets in. So by the time you get these bull bars coming in, you'd be like, wait a minute, let's not short this, right? So you could have tried, and like I said, the signal to noise ratio on this tiny time frame is not going to be as good as the bigger time frame, but you're going to get some early warnings, which I'll show you in a sec. We'll get there. We'll find one. But once you see this, you would know, okay, we might be in some sort of a consolidation phase, or perhaps there's a opportunity for a reversal here because this is a divergent wave, right? But that's what made this little dominant wave have an opportunity to get a little breakout here, and it's why this continuation trade failed. Okay, so let's see what happens next. Well, we get another dominant buy wave. See, this wave broke the dash, right? That is related to this down wave here. So all of a sudden, the smaller time frame is showing some signs of aggression to the upside, right? So some of our more aggressive reversal trades might start to work now. But what we want to look for is on the higher time frame, do we have confirmation of that? So do we have a up wave here that's actually bigger than the up wave here? And so far we do not. We'd have to break this dash up here. So on the higher time frame, we really don't expect to get a reversal. But on the smaller time frame, they are attempting to do so, right? So once again, as long as you don't have, if we did not have the divergent wave here, we would be looking for opportunities for continuation lower. Here, those opportunities might not work very well because of the divergent wave, but sometimes they'll still work. So let's see, we get a sign to sell here and a sign to sell here. Let's see if it works out. And it does. It gets us down to the low and a nice little scalp there. You had enough room that you could scalp back to the low if you wanted to. See that? This risk reward, even though you have the divergent bar, the divergent wave, the idea is this low might hold. Well, if that low holds, you're risking this much to make this much. And so even with the low holding, it would probably still work as a continuation trade. And then if you want to hold the runners, great, right? So that one worked out as a continuation trade because we had different information on the smaller time frame as we did on the bigger one. And that's usually a sign to go with the trend, or at least go with the bigger time frame. So let's keep going. What happens next? Do we get a low? So look here, we've got a bearish dominant wave now, right? That got over this dash right here, or at least certainly by here. So at this point right here, let me delete the arrow here. Our bearish wave is now dominant to the bullish wave, right? It's a little late to short because you're so close to the low, but it wouldn't hurt to start looking at the higher time frame and to see who's in control on the higher time frame. Well, take a look at what's happening here. We've got a down wave, but it is divergent, right? It's very small compared to this wave. It's not yet dominant, right? So we go down. Here's where they try to turn it. You wouldn't normally know that this is where you turn it, but since it's in the past, we do. And we clearly did have another divergent wave. Should we be trading to the short side? Probably not, right? Unless you're very, very fast, you probably don't want to trade to the short side. to be able to get the reversal to work, to get back long, what we would need is a condition where the bears are getting over aggressive on the smaller time frame, but not that aggressive on the higher time frame. So this is one of those situations. You have a fast time frame with really aggressive sellers, right? They have dominance and they're not divergent. See how this was the previous down wave? Oops, sorry. This here, too many arrows. This here was the previous down wave, right? Compared to the current wave. And this current wave got bigger than that, right? And we went lower than that because that wave was right here. So do we have a lower low? Yes. Do we have a bigger wave? Yes. So dominant, not divergent. If this was a big time frame, we would think continuation, look for a pullback to short, right? But this is the very small time frame. And so we have to flip things a little bit and refer to the bigger time frame where the trend really matters. What's going on in the bigger time frame? On the bigger time frame, we actually have a very weak divergent low and an attempt to reverse the market, right? We had a pretty strong up wave. This is a perfect opportunity to look for a reversal. That reversal how you trade the reversal, how you trigger the reversal is going to be up to you. For us, what we need is either a trap back in, which means it trades under this low and then comes back into that range of that low. Here it didn't quite trigger. If you put the line down here, you can see that we did not quite make a lower low yet. So that setup did not trigger. The other way we can get a reversal trade is if the this is the, oops, not that one. This is the wave to the low, right? So if I measure the wave to the low, I showed this earlier, so I'll be fast this time. The wave to the low had a volume point of control way up here. That would be our target for a quick, retrace, right? If we wanted to buy an aggressive signal and take us back to that point of control, that would be an okay trade for a very quick scalp, basically. But the only way to really know for sure that you have an opportunity for a big picture, higher time frame reversal is to get a bar with volume above that VPOC. And that bar needs to be bullish. It needs to close bullish. But right away, when we see this green bar and we see all of these scenarios, we know, okay, we can take a scalp, but it's probably not a full reversal. Now we also got a sign over here. This one was the trap back in. So see how there's a little flag right there, and we got lower than it, but then closed bullish back inside the range. So on the 15 tick, we actually got the bullish signal to go ahead and take the trade. But keep in mind that 15 tick, our expectations are only back to here, right? And on the bigger picture, that's right here, right? So realize that it's just two different time frames. On this one, on the smaller time frame, it makes sense that we would get the bigger trade to set up, because on the higher time frame we have the scalp setting up, and that equals themselves out. A big trade on the small time frame is very similar to a scalp on a small time frame. So let's see if it works. It does. So see how we got to the VPOC on the bigger time frame, so that one worked. And here we got to the apex, this little flag on the smaller time frame. So both of those trades work out. You can see on the smaller time frame how it really does look like a reversal, right? If something like that happens on a bigger time frame, you wanna make sure that you make note of that. But on the larger time frame, we got up to the VPOC, and now what we really need to happen is we need to see a bar close above it that's bullish. So let's take a look at the volume situation now, since we've gone forward a little bit. Big picture, what are we looking at? We've got a dominant up wave. It's the first time we've seen that on the big picture for a while, right? This whole way down, all we saw is big down waves, and all the up waves never overcame their previous down waves. You know that it's a big up wave or dominant up wave because this little dash that I drew is overtaken, right? And that dash is associated with the very previous down wave here, right? So the bulls now have volume dominance. So now let's look and see about divergence. Well, on the way down, did the bears put in a divergent low? They did. So the opportunity for a bigger picture reversal is still there. We can even if you didn't catch this little scalp, the chance for a reversal is here. But what we really want to see, like I said, is to get us above this VPOC. So on the smaller time frame, let's see if we have a likelihood of that happening. So who's dominant now? Well, we had a wave here that was down, and then we had a wave here that was up. And note how the up waves got above this dash, which means that it is bullish dominant. Now, here's the problem. Look at that bull wave compared to the previous bull wave that was 3 bars or more. That wave is currently divergent. So we need more upside to get any chance of continuation, right? So both of the time frames are saying the same thing. It's just 2 different ways to look at it. So we need a couple more up waves. We need to be able to be bigger than this one. So let's extend, it's this way, this one right here. Let's extend that and see if we can get beyond that to the upside. Because that's what's going to have to happen first before we have really any chance to reverse this. Unfortunately, it doesn't happen, right? We get the divergent up wave, which is a problem if the higher time frame is bearish. Well, is the higher time frame bearish? And this is a little bit confusing because you might say, well, look, it's got a dominant up wave. It must be bullish. Unfortunately, it's not that simple. What we need to look at is, could we get volume above the VPOC of the big wave to the downside? That VPOC was here. We were unable to get any volume up there. The moment we got price up there, they rejected. So guess what? We don't want to be buying dips. We want to be selling rips now, right? I know it's a little confusing because it's like the bulls are dominant. It's the higher time frame. I thought that was supposed to be bullish. Unfortunately, when you have this scenario on the smaller time frame, it's just not ready yet. It does not mean that we must break the low, but it probably means we shouldn't be aggressively buying breakouts, right? So we should wait until we have both of these scenarios lining up, or we trap some shorts like this. See here, we got those shorts trapped on the smaller time frame, and that's why they were really aggressive on the smaller time frame and they weren't on the higher time frame. That gave us the opportunity for this scalp trade, right? If we can do that again, we could get another chance, right? So let's see what happens. Do we get a big seller to come in, or do they reverse it and put volume up here? Let's see. We need a big seller on the smaller time frame that is not seen on the higher time frame. So let's get rid of this. That's not so meaningful anymore. They do put in a down wave. That down wave though is weak. See that? Very weak down wave. Not very impressive. Probably not trapping anybody. We should wait until we get volume up here before we think about buying. And again, it might look enticing because we have this big up wave that's dominant on the higher time frame, but it's not safe yet until we get someone trapped here or until we get volume up here. Doesn't mean you can't buy it. It's just not the way I usually do it, because chances are your target is right back here, right? So it's not that you can't do it. It's just not the best way to do it. This is probably a short, but to see that, you'd have to look and identify that even though you're going higher, well, actually we didn't break the high. If we would have broken the high, we didn't quite, then this wave here is divergent, right? And if it's bearish and you have a divergent up wave, it's probably going lower. So in this case, it didn't quite make a divergent high. So we should wait before we sell. Let's see if they can... Nope, no divergent wave, just weakness, right? Consolidation, sideways trading. Now, what's happening on the bigger time frame? On the bigger time frame, the bulls have the dominant wave, but you can see that all the bears need to do is get to this dash, which could happen anytime with just one big sell bar, and they'll be the dominant side. So you have to ask yourself, how far away are we from there, and is it reasonable to think that that's going to happen before the low gets beat? Because if it does, then that low is probably gone. If this dash was way up here, I'd be like, yeah, I'm going to go ahead and try to buy this dip, or if we get under the low and we immediately bounce, I'm going to try to buy it because chances are we're not going to break this wave. Well, in this case, we're probably going to break it well before we get to the low. So let's see if we do. Right there, it gets broken. See how we've gotten to this dash now? So there's no question now that bears are not only dominant on the smaller time frame, see that?
They're also dominant on the higher time frame, and it's not divergent, right? Not at all. So we're probably going to take out the low, and if you wanted to trade a breakdown, this is where to do it. So we go take out the low. I wouldn't touch that. I would not buy this. Why not? Because look at who you're facing, right? Look at this. Big time frame, huge sellers. Bigger than you've seen in a long time. Small time frame, you have no one trapped. They didn't need to work hard at all to take that low, right? All of the sellers are sitting up here. They're not trapped at all, right? The sellers, that's associated with this wave here. The sellers are here, and price is here. And they didn't have to work hard at all for it. Do not buy that trap. Okay? Don't do it. You need to wait until you see something different. Now, here's where it gets tricky. If you were just looking bar by bar, you might say, well, look, this bar has some strength. It might take over this sell bar, and maybe it'll be the dominant wave. It doesn't matter if you have this to contend with, because there's no way you're going to take this. So if you do take this trade to the long side, your target is the next apex right here. And that is not good risk reward, and it doesn't even hit, right? So let's quickly figure out where this changes. So you just don't, there's no reason to even think about buying until you get someone trapped, okay? You need someone trapped down here. So we wait. See how there's no real heavy selling? It's not worth, in my opinion, it's not worth fighting that. Just don't fight the trend when you see this on the smaller time frame. Not if this is happening on the higher time frame, right? I hope that's helpful and not confusing. So now we finally get them committing some volume on the smaller time frame. See that? This is your first opportunity where you could be like, okay, we finally got somebody committed to selling. So now if we can get a sign of some aggression to the upside, maybe we'll have a scalp on the smaller time frame. But should we be expecting a big reversal? No. Not if we're facing that. Not until we get at least a bull wave that has some strength. So let's see. I'm not saying that can't be the low, I'm just saying we have no reason to think it will be. So look, we get a dominant up wave on the small time frame. Do you remember what we do when we have a volume, a dominant wave that goes in the opposite direction of the higher time frame? Usually we go ahead and trade with the trend, right? So we'd sell this and look for us to break this low potentially. It would be my normal trade, right? And they do it, right? So that trade works. Now, look what they had to do. Look what kind of effort they had to put in to take that out. Big ass effort, right? Tons of sellers on the smaller time frame, right? Now, look at the bigger time frame. What do we have on the bigger time frame? We have weak sellers compared to the last wave. This, my friends, is where you can make some money, right? Now, even if you missed this entire move down, this is the first place where you might want to start looking for a trap trade. What's a trap trade? It's where you get under a low and you come back and you close inside of the low, right? Because we have a ton of sellers at the lows on this small time frame, and we have very, very few, basically, even though it's the same information, the sellers that brought us here had to worked really hard. We had much more volume down there, or up there, compared to down here. So we have a bunch of sellers on a tiny little time frame, shorting the lows, right? Which we see right here. They are breaking into the lows. But up here we have a potentially divergent wave, right? Is it always going to reverse immediately? No. But it's probably time to start looking for trades to the upside. What would help would be some divergence on the indicators, or a sign of some aggression, like a bullish wave on the smaller time frame might help too. So let's see. So this first one, if you were really aggressive and just bought this, it does fail. And this, like I said, the smaller time frame trade setups are going to fail a lot. But if we get the same exact setup here, where we get below it and then we trade back up above it within one bar, That one might work. Let's see. Okay, there it is. That's it. So see how, oops, I didn't mean to. Okay, so see how this high is above this low, but this low is below that low? In these conditions, not all the time, but in these conditions, when you have the big sellers on the small time frame all in near the low, but on the higher time frame, the big sellers are higher up, and now you have even more. You have a divergent wave down to the low potentially, right? Unless this grows further, you might actually get not just a little scalp, but a total reversal. So we're looking here now on the smaller time frame, and we say, do we have confirmation? Well, to get confirmation, what we need is this small divergent down wave to the low needs to get broken by an up wave. So it gets met here. So basically, any price action higher, and we're good to go, right? So you could wait if you want to be sure, and that would be right there. Otherwise, you could just kind of expect it to happen. But you can see right here. Oops. You have a lot of information. You can see how close we are to breaking that, right? And at 11,203.50 before this even closes. So by the time you get this bar, and you can see that we are at least meeting, if not exceeding that, you're only 1 point above this bar. You're not at 11,211 yet. Does that make sense? You are only at 11,206, I think, 75. 1 point above this. So if you just wanted to wait a millisecond to make sure they put in this next bar, yeah, you're going to be 1 point higher on your average, but you're going to have some extra information that this low might actually hold the very first time, because this bullish wave is actually overtaking this divergent wave, and you have a potentially divergent wave on the downside. So I'd say this opportunity is much higher than the previous ones. Will it work? I actually don't know. It might not, right? Sometimes this takes multiple tries. So let's see. Does it work? This is the kind of setup, though, you'd want to look for, and we're probably getting close to the low. It just doesn't always work the first time. Okay, so we get, and then we had divergence. I didn't see that. Look, we had a higher low on price, on the MACD, but a lower low on price. So that always helps. Higher low on MACD, histogram, lower low on price, right? So normally the way I'd trade this is I'd buy 11,206.75 or 11,207, and my stop would go under this low. So 11,190, let's say, maybe a point or so on NQ. You really only need a tick or two on ES, but on NQ it can move up. It can move 4 ticks real easily, right? So that's what my trade would look like if I pulled back this far into it and I didn't take my full size on the entry because I was a little nervous. I would actually add here with my not here, but as it came back into like here, I would add to the trade with my stop staying the same. Because sometimes now if I took my full position here, obviously I can't add to it. But if I was like nervous about this, I'm like, yeah, I don't know if it's gonna work, and it's kind of aggressive, I'll take half my size here. When I get this pullback, the moment I see some aggression to the upside like this, right, on the smaller time frame at like 11,203, I'm adding to the trade. So by the time I get to 11,205, I'm now full size with a very small risk compared to what I normally would have, because half of the position was added like points lower, right? So now let's see what it does. It may not work. I honestly do not know. Look how they put in a dominant bull wave. That's promising, but now we need to do the same thing here, otherwise it's going to fail. We need a dominant bull wave. It fails. This one fails. So it got you, how much did you get on it? It got you from 05, I think, is basically our average, to, okay, so we did get our 10 points, so I would have gotten half my risk off, but my runners would have gone lower. So the reason it didn't work, if you want to see, is on the smaller time frame, things were starting to look bullish, right? On the higher time frame, we just couldn't overcome this divergent wave. Even though it was divergent, we could not get any buyers above this dash, and so it just didn't work, right? And if you were here and you saw that it's not working and you want to reverse, it's okay, right? You can do that. I'm just not that fancy. I don't like fancy trading. I just set my trade up, put in the stop, put in the exits, and just see what happens. I'm not usually the type that's like, it's not working, I'm going to flip, because I tend to totally trip out and tilt when I then hit my initial target. after flipping. So, but yeah, notice we did get the dominant wave here. So let's see if we can find the low. Is it right? It's probably right here. They stop everybody out. They once again trap back in, right? So let's see. Did we have a divergent wave here? We did, right? The down waves are getting smaller on the bigger time frame. So they're getting weaker as they go down. Even though price is dropping, we're getting less and less participation to the downside. We have a dominant wave here, right, to the upside, and then they got a divergent wave to the downside. So now everything's lined up. It's probably going to work. I don't know if it does. I do not remember. It probably will. Nope, it doesn't. So that one fails as well. Let's see. I swear sometimes they work. It just sometimes takes a few tries. So here we have dominant wave up, but look at the difference, right? Look at the difference there. And then do we have a bull wave? We do. You could try this one. You have a bull wave here on the smaller time frame, so there's a potential for a little bit of a lift. And on the smaller time frame, I mean it's divergent to here. I guess it's not divergent to this one. So maybe not such a good idea. What you really want is a big sell wave down here and a weak sell wave here. So I kind of doubt that's the low. It might be. Let's see if we can get the natural one. Yeah, that's not it. We want the big down wave here, but a weak down wave here. That's usually the low. There. Is it dominant? Not quite. We want this wave. Oh yeah, it is dominant. Isn't it? It's close. And then this one is not. Let's see if that works. There it is. No? Is it the low? Not quite. Yeah, it didn't quite make the dominant. See how the line, it didn't quite beat it. It was close. It didn't quite beat it. So we need one to beat it. We need a big seller now. So this one, is this a big enough seller? This one might work. Big enough seller, I think. Let's actually measure it like I would if I'm trading. Wow, it's close. It's really close. Do we have a divergent sell on the higher time frame? Yes. The first one we did, good chance it works, right? Back here, the one we got 10 points for, good chance it works. This one, not so great, might work. This one we just did, you probably get a scalp because of this, but now this one might be a bigger one. Let's see, where is it? Right here, right? Did we get the big wave here and the small wave here? Let's see if this one works. I would not be surprised if this is the low. Yes. That looks good, right? Because look what happened. Now we've got a big wave on the to the upside on the high time frame, and we've got a dominant wave on the up time frame, right? You knew that right when this line was crossed. Let me show you when you knew that. If you didn't want to be aggressive, you could just wait for both of them to confirm. But we had a good chance of it happening because the down waves on the high time frame were getting weaker, but they were shorting heavily on the small time frames. They were getting stronger, right? Right here. That was really the sign that something's up. And then when we got the dominant wave to the upside on the small time frame, which happened right there, even if you didn't want to try to catch the low, this is when you can start being a little more aggressive. And then here, see how they got over it right here? This is a fine place to buy. If nothing else, buy dips or traps, right? So any dip from this is just, it's done. So see the trap here? It gets lower than this and then comes back in with aggression. That's your most conservative. It's the first trap after that little dance they do where they have the big wave down on the small time frame, but a weak wave down on the big time frame after a long move down. Then when you get the trap, it's over. Usually you get a really nice move. And really, we're just looking for 20 to 30 points. Now, can it reverse? Yes, right? It can. You can still. It's not a something that works for the rest of the day, right? But all I'm saying is that this move here is your high odds trade. So if you're really against losing and it's hard for you to give back money, maybe you're trying to qualify account with Apex or something like that, and you just can't give back, just wait for the high odds trade, which is for this exact thing to happen and then for the first trap. That is going to work literally like 70+% of the time. The divergence down here, probably more like 55% of the time, right? It's aggressive. But when it works, you get monster moves from my perspective, right? Now, what's neat, I don't have time to do it, but what's cool is you can actually do this on the same exact technique on a higher time frame, right? We were so zoomed into a 24 tick trying to get a stop that was a risk that's no bigger than like 15 points. Well, the same exact thing works on the higher time frame. Look here how at this high we had a divergent high, right? On the big time frame, they had less sellers here. Look at the same situation. See how that's lower, right? This dash did not get overtaken. Look at the lower time frame, the half of that, the 40 tick. Look at all this buying that happened on the 40 tick, right? Right here. Compared to all of this selling, look at that. Huge buying. Look at the 24 tick, if you want to go even further than that. Huge buying, right? Now they got a little tiny little wave up here, which was your hint, right, that something's up. But if you're just looking at the bigger picture of whether or not this is going to be a big reversal, you're not just looking for a scalp. You want to know, is this going to be a big reversal? You need this to be divergent, preferably, and the smaller time frame, slightly smaller time frame, to have a big push up right at the top. Boom. That's what you want. Now these aggressive signals will work relatively quickly, and if you don't want to be aggressive, wait for them again to take out that last wave. You can do this on the smaller time frame too, but this last wave right here, this last apex, wait for them to take it out. If you want to be conservative, right there, wait for them to take it out. That's your first opportunity for a breakdown trade, right there. Once they take it out, and then if they retrace into it, sell it. Retrace into it with aggression. It didn't give you much on this time frame, but it did give you the stars. And then since the 80 time frame set up too with divergence, you know that it's the chances are that's going to be a big trade, right? Whoops, I keep messing that up. So this one, and then on the 80 tick, you would use this to identify the divergence, and then if you wanted to have confirmation, you could wait for the sign of aggression to show up on the 80 tick, plus divergent followed by purple bar is a super strong trade if you're going in the direction of the trend. And now you know the trend is down and it just absolutely falls away, right? Black dot, purple bar, if they're right next to each other, you'll get an extension, as long as you're going in the right direction. So okay, I got some stuff to do. Just wanted to share that with you. I wanted to make this as fast as possible. I know it's a lot of information, but I'm going to record this. It'll be on YouTube if you want to watch it again. Weis waves are available, you guys. You can get them at TradingView or Sierra Charts or whatever. This is something you can actually do right now, So, hey, nice to see you, Yoga Girl. Yeah, I wish I could stick around, but I got to run. So, watch the recording and let me know if you have questions, and I can go over this more slowly later tonight, okay? Just, you can contact me at Red Ben Trader and at Twitter. And if you want to dig into this deeper or see some other ideas, let me know. We'll do a stream later tonight.